In the hot seat this evening is Sid Vianello, retail analyst at Nedgroup Securities. Now, Sid, we were about to talk retail, but as you came in, you shouted at us because you said we'd left out an important point in the education discussion we were having. We were talking about Advotech, whose results had come up, and Curro, a relatively new group. What was the point we missed?
Well, I think the two businesses, their strategies going forward are completely and totally different. And on the one hand, you have Advotech, which has actually built new schools. Sure, they have acquired other schools, but they've actually built a lot of new schools. They've actually added to the private education market in this country. They've actually created value by building schools, taking surplus cash that they could have given, surplus cash that they could have given back to shareholders, but they used the money to build new schools. It's true that their growth rate has slowed down, but obviously your growth rate at the end of the day is a function of how many additional seats and desks that you add to your business.
And Curro's not doing that.
Curro's strategy, from the way I see it, is simply to go out and buy other schools, existing schools, not add new seats, add new chairs and desks for themselves, but not to the total population of the private education market in the country. And I guess at the end of the day, it's going to be a question of what do they pay for these additional chairs and desks that they buy? Do they end up paying too much goodwill? And will they get a return?
And how do they get more value out of it if they're taking over something?
If they're taking over well-run companies, it's very difficult to add more value because it is a competitive market and there is obviously a limit to the amount of profit you can make in each school. If they're buying badly run businesses and they buy them cheaply, well then obviously they're going to add value.
But so do you think there's scope for more capacity? In other words, is there scope to build more education facilities?
Well, if we just go through the discussion that you had before I came on the show, everyone's talking very positively about the private education market in this country. So at the end of the day, I mean, the follow-on must be that there is scope.
But then should...
Guys, we don't want to get bogged down in the previous discussion, although
please bear, you know, I'm not the expert in this field.
No, but you make the point.
I'm an outsider.
Of course, there's an assumption too, if I can now contradict myself about stopping the discussion, but I'm in control. So is that public education, there's an assumption that it will continue to deteriorate or not improve, and if that changes, then of course the private sector's prospects change as well. But let's leave that now. We move on to Sid's speciality, which is some private sector, some listed retail companies. Before we get onto the familiar names like Pick n Pay and JD Group, Perennial is a name that you want to talk about, Sid, and it's not a name that...
Which one?
Perennial, the Chinese retail store.
No, I wasn't. I don't know anything about the business.
Well, then I've asked the wrong question with that one. But let's go on to the familiar names then. Pick n Pay, JD Group, ShopRite, Foshidi and Truworths. Anyone that you want to pick out there?
Well, I actually wanted to say a few words about Pick n Pay. I mean, we all know it's in the doldrums, so to speak, and it lost its chief executive a few weeks ago, and a lot of people have all but written the business off, etc., etc. I mean, we can go through a whole. I mean, it's not very difficult to find things that are wrong with the business. But last week, I was at a conference. I was the chairman for one of the days of this 2-day conference, and one of the speakers was somebody from Pick n Pay, talking about the theme of the discussion on that particular day was about store cards and things like that, and we ultimately came down to the smart card, the smart shopper card, and I was taken aback by the good things that I hear about this card, and for that matter about the new merchandise director, the German Helmut somebody or other, who's now the merchandise director of the company, and for what I can, just putting two and two together, he's certainly already made a lot of waves in the organisation.
These things that other retailers are not doing, that their competitors.
Well, you know, Spar being a wholesaler, Spar can't do something like that, and ShopRite have made it abundantly clear that their business is all about price, and a card, a loyalty card of whatever kind, ultimately there's a cost attached to it, and somebody at the end of the day has got to pay for it. And ShopRite's attitude, and I mean they're not the only one to take this view, that store cards at the end of the day can end up costing you money because there is a cost and somebody's got to pay for it. You're hoping, of course, you'll pull in incremental business that will offset the cost. But, you know, if everybody in the universe has a store card, well, then we're back to square one. And I think their attitude at this stage is
they haven't and they don't want them.
We don't want one. Our business is all about price. And when you add a loyalty card to your offering, we are talking about cost. And cost ultimately equals we lose our price competition.
So do you think that Pick n Pay, where do you think they are in terms of market share? Do you think they're still under pressure, potentially losing market share still? SA, I'm talking specifically in South Africa. Or do you think they've started to turn the corner?
Well, we saw in the August numbers that there was evidence that it probably hasn't turned up, but I think the market share erosion, it would seem as if it has come to an end. But of course, a lot of that right now could be due to the initial impact of Smart Shopper. I mean, Smart Shopper, and I'm going back to Badminton's presentation in October on the half-year results. He believed that they picked up, I think he spoke about 3% incremental turnover growth coming out of Smart Shopper. Now, if I remember correctly, they obviously wanted a much bigger number, but that's the kind of, I mean, it's all a guess, it's all guesswork at this stage, but I think it has arrested it. I don't believe it's turned the corner yet.
But let's go to compare Pick n Pay to Shoprite. You've mentioned Shoprite. It's another one to talk about. And if you think of a few years ago, Pick n Pay was the blue chip of the sector, could do no wrong. Since 1970, it had delivered the best returns of any company on the stock exchange and so on. And then there was the wobble and then the resignation. Shoprite, on the other hand, looked a bit unfashionable at that time, but is now looking like the blue chip of the sector.
Well, Shoprite's market share has now overtaken that of Pick n Pay. And if you talk to any supplier, the suppliers will tell you that Shoprite's the growth in, let's say, in deliveries by at manufacturer level to Shoprite is far greater than growth in deliveries. In other words, you're talking actual cartons of goods to Pick n Pay. And I mean, if we just look at our estimates of market share, and what I do to calculate market share, you've got to adjust both companies for the impact of the franchise turnover. Now, in the case of Pick n Pay, they've got a big franchise business. They don't disclose numbers. Our estimate is that the franchise business at company level is about 1/3 of turnover, but grossed up could be as high as 40%. Because remember, we've got to adjust the turnover for the retail margin, plus the purchases that are not put through the system.
Let's look at YD Basson and Shoprite. Pick n Pay tried Australia, didn't work. Shoprite has tried Africa, has worked.
But it's debatable. It's debatable whether it has worked. It's worked in the sense that it does represent, I think, about 12% of turnover and roughly the same sort of percentage operating profit. But has it worked when we compare it with, let's say, where is that figure compared with 5 years ago? You know what? It's still 12%. It's actually done nothing in 5 years. And one argument is, well, if we take their 10 or 15 year endeavor in Africa, and that's all they managed to get out of Africa in all these years with all the investment they've made, has it really worked? From
Kevin, do you agree with that?
Look, I don't know. I mean, Sid knows the numbers better than I do, but my sense is that exposure to Africa at least has assisted. I don't know whether it's been able to grow as much as you would have wanted within a 5 or 10 year period, but it definitely provides an alternative market area. And I would rather have been in Africa than have tried the Australian route that Pick n Pay went. And from what I can see, Pick n Pay is now also trying the Africa route, but you would have to argue is behind the curve. In other words, they're late to the process. So net, I would argue that the Shoprite strategy overall has been a better
and surely
approach.
better placed for the future for growth.
No, they are better placed for the future. But if we, with hindsight, we go back and we say, well, this is all you've achieved in all the years that you've been in Africa, then why should we put such a huge premium on the share price? Because we think there's a premium on the share price if you're putting on a premium for Africa. Because I don't think it's justified at this point. However, if Africa is going to be the flavor of the future, then Shoprite is streaks ahead of anybody else in the industry.
We'll have to stop on those two very interesting companies, because there's another one I want to ask you about, Sid, and that's JD Group, and of course the relationship with Steinhoff. The effects of that?
Well, you're only going to see, there are many ways where the effects could come through. from a procurement side, in other words, we're talking about merchandise, Steinhoff is going to link into the international procurement operations of, or JD will link the international procurement of Steinhoff, presumably, and I think it's fair to say that it will give them a broader horizon or a greater opportunities to procure merchandise that they previously have not been able to.
Do you think that's
source.
just different type of merchandise or better cost of merchandise?
Well, it's going to be a combination of the two. If you look at Lewis's experience, where I think over about 40% of their core furniture range today is imported. In their view, it's given them price advantage, but also the product they're importing just cannot be manufactured in this country. There is just no equipment to manufacture it, period. Full stop. Yeah. And so therefore it's giving them variety, and it's giving them variety at a good price. And I guess exactly the same thing. The same sort of benefit will come to JD Group down the line. So you won't have to, and I mean just to use a simple example, you won't have to just take a fridge and change a few handles and change the position of the lock to make it different. Now you'll be able to bring in something which is fundamentally different from the one that you could procure currently locally, or you just cannot find, if it's furniture, you just cannot find it anywhere in any event. So that's the one leg, but obviously the other leg is probably the one that, you know, that's got the market all excited, and that is the financial services arm. And there are links in common directorships, and of course now with the PSG involvement with Steinhoff, and the link, the common denominator is the financial services arm of JD Group, and at the end of the day, Capitec Bank. And there is talk, and there has been talk, I mean, right through the investment community, that maybe the two can do something together, they could be merged. I mean, who knows? It's difficult to predict what could happen, but ultimately something could happen down the line to, and obviously it's got to be beneficial for both parties.
We'll have to end there.
Can I ask Sid
Quick
quick question? Very quickly. What is your sense of where the consumer is? Ended off last year, the data looked very good, consumer spending was good. We're going into this year. What is your sense of how strong the consumer is? Are they going to be under pressure?
Well, you've now seen the government numbers, central stats for January. A month before that, I saw the RLC Retail Liaison Committee numbers for January, which painted the exact same bleak picture, which I warned people about, that the January numbers were not going to be good. I've heard anecdotally, now, on the one hand, about the things I've heard about public companies in the apparel industry have come through a third party, so I haven't heard directly from the companies, but I have heard directly from owners of privately owned companies, once again in the apparel industry. And this is how one small operator, he operates, he's got a dozen or 20 odd stores dealing with the bottom end of the market, and this is how he put it to me. January was bad. February was even worse. And this is 2 weeks ago. And March to date has been just as bad.